Hi guys, welcome back to this week's Technical Insights. Singapore shares closed lower on Friday, September the 8th after markets in the region finished mostly in the red. The Straits Index fell 0.58% to 3,207 points. Losers outnumbered gainers 184 to 177, with 778 million shares valued at 671 million being traded. The biggest loser on Friday was Jardine Cycle and Carriage, which fell 1.9% or 63 cents to $32.13. Other big losers include UOB, Jardine Matheson, and NIO. Jardine Matheson shares slipped 0.6% or 27 cents to $47.65. NIO, the Chinese EV maker, tumbled 2.6% or 27 cents to $10.15. The trio of local banks all closed in the red as well. UOB ended down 32 cents or 1.1% lower at $28.28. OCBC fell 17 cents or 1.4% to $12.43. DBS slipped 0.5% or 18 cents to $33.23. Major indices in the region, including those in Australia, Taiwan, Shanghai, and even Malaysia, all ended the day lower. There was also weaker than expected economic growth in Japan after the country released its revised second quarter GDP figures lower. Japan Nikkei 225 tumbled 1.16% on Friday. Hong Kong Exchange cancelled trading on Friday after a black rainstorm warning. Hong Kong halted the trading of stocks and derivatives for the second time for this month after the local observatory issued its signal for the most severe weather conditions. The Asian financial hub saw its heaviest rainfall in 140 years. The northbound link of the Stock Connect, which enabled foreign investors to buy mainland equities, was similarly affected. For the week, the Dow Jones Index finished 0.8% lower to 34,576 points. The S&P 500 dropped 1.3% to 4,457 points. The NASDAQ composite tanked 1.9% to end at 13,761 points. Do note that the figures here are a bit different because last Monday, 4th of September, was US Labor Day holiday, so US had a shorter trading week. In Asia, the China Blue Chip Index CSI 300 sank 1.36% for the week, following China's poor external trade data for August and concerns about the slides in the nation's currency. In Hong Kong, the Hang Seng Index fell 1% to 18,202 points, snapping a two-week rebound. Our Singapore STI Index declined 0.79% to 3,207 points. All three local banks finished lower for the week, between 0.21% to 0.96%. The biggest winner we had on our benchmark index last week was DFI Retail Group, which jumped 2.83% for the week to close at $2.54. The biggest loser, however, is Sembcorp Industry, whose share fell by 4.3% to close at $5.12. So for this week's technical analysis, let's look at both of these stocks, DFI Retail Group and Sembcorp Industry. DFI Retail Group closed last Friday up 2 cents to close at $2.54. We covered DFI Retail Group 2 weeks back in our Technical Insights video on 28th of August. The observation then was that there was a negative MACD and a weak RSI reading at 34. Fast forward to today, DFI Retail Group managed to break above the 20 days moving average, which is the white line or the Bollinger Band basis. In the coming weeks, it will face stronger resistance on the 50 days moving average, which is the yellow line that you see over here at $2.60, and the upper bound of the Bollinger Band in the white line at $2.61. If DFI Retail Group is unable to break or close above the 50 days moving average, the primary downtrend that we observed since March of this year will likely resume. The candlestick last Friday of DFI Retail Group had a top week, but ended the day in the green, so this is a neutral signal. MACD indicator is now positive with upside momentum as indicated by the MACD histogram. But the real test is if the MACD line, which is the blue line, can break above the zero baseline. The RSI indicator has peaked above the 50-point neutral mark, now reading at 53. So the upside momentum is still pretty weak and it is still close to the 50-point neutral mark. So overall for DFI retail group, the signals are still pretty weak, and we should look out for the resumption of the primary downtrend that we observed since the beginning of March of this year. Next, let's look at Sembcorp Industry. Sembcorp Industry closed last Friday down 3 cents to close at $5.12. We covered Sembcorp Industry on the 21st August video. The technical indicators we observed then suggested that there's weakness in Sembcorp share prices, and we observed that strong support may come in around the June low, which is around the $4.90 area, or even the 200 days moving average, which is the red color line at $4.17. Last Friday, Sembcorp Industry closed at $5.12, so we still have a bit more to go before we reach the 490 area, which we identify as the first support on the low of June. The 20 days moving average, the white line of the Bollinger Band, also crossed below the 50 days moving average last Wednesday. So this signals that there may be short-term weakness to Sembcorp Industry share price. The lower bound of that Bollinger Band is now at $4.97, which is also close to the June low that we observed. The MACD indicator is still negative, but the downside momentum seems to be subsiding on the MACD histogram. The RSI is still weak with the reading at 37 and it's getting closer to the 30-point oversold mark. So if you're looking at getting back on the primary uptrend that we observed for Sembcorp Industry since the beginning of the year, do look out for the RSI triggering below the 30-point mark, which is the oversold signal, and that may happen around the $4.90 area. So that is all I have for this week's video. If you find this useful, do give us a like or a share and consider hitting that subscribe button to stay up to date to our latest content. And I'll see you again next week in the next Technical Insights.